Welcome, future CMAs. All right, let's get right into it. If you are serious about passing your exam, you absolutely have to master the income statement. It's a huge piece of the external financial reporting decisions section, and in this explainer, we're going to break it all down so you can walk into that exam feeling totally confident. So, what is an income statement really? The best way to think about it is like a company's report card. It tells you exactly how well the business performed over a specific period of time. It's the story of their wins and losses, and you need to know how to read it. I mean, think about it. To really understand how a company is doing, you can't just look at one single day, right? That doesn't tell you anything. You need to see the whole story as it unfolds over a month, or a quarter, or even a full year. And this slide just nails the difference. The balance sheet, that's a snapshot. It's one picture on one day. But the income statement, oh, that's the motion picture. It shows the action, the movement, the whole story of how the company performed over time. That's why it's so powerful. You know, when you strip away all the jargon and all the numbers, the income statement really only exists to answer one single, incredibly important question. Did we make any money? That's it. That's the whole point. So we all know the basic equation, right? Revenue minus expenses equals net income. Simple. But for the CMA exam, oh no, that is just the tip of the iceberg. We have got to go deeper into what we call the multi-step format. That's where the real analysis happens. And that's what the CMA exam is all about, the multi-step income statement. I like to call it the profitability staircase. Why? Because with each step you take down, you get a much clearer, more detailed view of where a company's profit is actually coming from. And this is exactly why it's so critical for you as a future management accountant. It doesn't just give you that final bottom line number, it shows you the how. How did we get here? And that's the kind of deep insight that really drives smart business decisions. So, are you ready to take a walk down the profitability staircase? Let's do it. We're going to go through this together step by step, from the very top all the way down to the bottom line. Okay, let's break this down. We start at the top with gross profit. That's just your net sales minus the cost of goods sold. Super important, it tells you how profitable your actual products are. From there, we subtract operating expenses to get to operating income. This is a huge one for the exam. It shows the profitability of your core business operations. Next, we adjust for non-operating stuff like interest, and we get income before taxes. Then, of course, we take out taxes, which leaves us with income from continuing operations. And the final step, we account for any discontinued operations, and we finally land on the big one, net income. Okay, listen up, because this is really important. This is where the CMA exam loves to get tricky, and where so many good students lose points they shouldn't. The examiners want to see if you know exactly where everything belongs on that staircase. Let's make sure you do. I see this year after year. There are three major traps that you need to be watching out for when you see an income statement question. Let's walk through each one so you can spot them a mile away and just sidestep them completely. Trap number one, discontinued operations. These are always reported below the line, way down at the bottom. And there's a good reason. It signals to anyone reading the report, hey, this income or loss is from a part of the business we sold off. It's a one-time thing, it's not going to happen again. And do not forget this. It's always, always reported net of tax. Oh, here's a classic exam trick. They'll give you a bunch of expenses and ask you to calculate gross profit. But hidden in that list will be something like marketing costs or the CEO's salary. Don't you fall for it. Gross profit is only your revenue minus the cost of goods sold. All that other SG&A stuff, that comes out later when you're figuring out operating income. And the third big trap is other comprehensive income, or OCI. Now, these are weird items, like certain unrealized gains that are considered just too volatile to put into net income. So what happens to them? Well, they completely bypass the income statement. They take a secret back door straight to the equity section of the balance sheet. You have to know the difference. Okay, enough talk. You've seen the concepts, you know the traps. Now it's time to put your knowledge to the test. Here's a little problem, just like something you'd see on the actual exam. Let's see what you've got. All right, take a look at the data on this slide. Your job is simple. Calculate the company's operating income. All the numbers you need are right there. But be careful, not all of them belong in this calculation. Just think back to that profitability staircase. Find the right step for operating income and stop right there. And don't let those extra numbers distract you. They're just there to test if you're really paying attention. Did you get $100,000? If you did, fantastic. You absolutely nailed it. You started with sales, you correctly subtracted COGS, and then you subtracted SG&A to land right on operating income. And you were smart enough to completely ignore the interest expense and the tax rate because you know they come later on the staircase. That's perfect. Well done. See, you're on the right track. Getting this multi-step income statement down cold is going to make a huge difference for you, not just on exam day, but in your entire career. Keep putting in the work. Every single hour you study right now is an investment in seeing those 3 letters CMA after your name. You've got this.